One of the most important mindset hacks on the path to FI is taking control. So this is what we call an internal locus of control. It's not that some external force is acting on you, some elusive they, right? How often do you hear people say, oh, they did this to me, they did that to me? And a lot of people feel that way. They feel that their life is not under their control, that things have spun out of control. But one of the fundamental pieces psychologically of the path to FI is you can exert control over your life. So it's internal. And when you start seeing that come to reality, when you start making changes that move you forward, that make life better, that make your net worth slightly more positive, and give you that little bit of space so you're not so stressed mentally anymore, then you understand, okay, I have control over this. And one of the phrases we love is control what you can control. And one of the ways that we see this come to fruition most, so it's through taxes and fees. And we do have other videos, obviously, both on taxes and fees here in the 5 Fundamentals series. But just in terms of a very broad sense of people don't think they have any control over taxes. It's, oh, Uncle Sam hits me with this, or I pay too much in taxes. It's so easy to otherize it in terms of they're impacting me. But the beautiful thing is that you actually have a significant amount of control over what federal income tax you pay. Now, for many of us making, let's say, $100,000 or less, which is still a fantastic income, even just putting some money into your 401k, that's one of the biggest ways to exert some control over your taxes and how much tax liability you owe, is by putting money into these pre-tax buckets, these tax-deferred accounts like a 401k, a 457, a 403b, traditional IRAs, the HSA, the health savings account. These all give you tax deductions today. So again, it's control what you can control. So it's not, hey, I have no control over what the tax rate is going to be 20 years from now or 50 years from now, or what Congress is going to do in the intervening time. But I know, okay, what is my marginal tax bracket? What is that tax I'm going to pay on the next dollar of my income? And if I can put some money into one of those tax deferred accounts, then that actually reduces my taxable income. So that is, I am controlling, in essence, my tax rate, especially when you're talking about, let's say, 2 spouses who are maxing out a 401k at nearly $20,000 each. You're talking potentially almost $40,000 worth of deductions. Now, you add on top of that the standard deduction you get, just the federal government gives you, which is over, I think this year for 2021, it's over $25,000 for married filing joint. So you're talking about somebody with a $100,000 combined income who gets a $25,000 standard deduction. Now I'm rounding, of course, but that gets you down to $75,000 of taxable income. And then take $40,000 off of that for potentially tax deferred accounts. You're down to $35,000 of taxable income, which means your federal tax liability is going to be a couple $1,000s at most on $100,000 of income. So a couple thousand. That means your effective tax rate, the tax rate that you pay on that entire amount of income, if you look at it in totality, is going to be 2, 3, or 4%. Now compare and contrast that with, oh, I'm taxed enough already, or you hear all these people just complaining about taxes. It's because they don't know. They don't understand how it works, A, and B, that you have so much control over this. So that's one side. Another side that we look at, again, this is a mental framework, but just to give you another concrete example, is expenses and fees. So many people pay fees all the time. And you see this in terms of bank fees, overdraft fees, credit card fees. Anytime you're doing something where you're just not paying attention, you're paying convenience fees. You hear that all the time. ATM fees because you're too lazy to get cash out at your own bank. Those fees you can control. And you certainly can control the fees on your investments. And now we go into great detail on compounding and how this works and just how critical it is to control the fees, because it can amount to really potentially losing if you invested with an investment advisor at, let's say, a 1% assets under management fee, which sounds like nothing. It's 1%. And then you pay and get a fancy mutual fund that's actively managed. That's another 1% in fees. Again, that's 2%. And you're getting a great financial advisor. You're getting an actively managed mutual. Over the long term, it's almost unlikely to impossible that they're going to outperform the market. So over 50 years, very unlikely. But you're paying that 2% every year. And that's going to cost you almost 50% of your net worth when compounded over 40 to 50 years. 50% just from those tiny little 1% fees to each of them. What I look at and say is, okay, I can't control beating the market. I can't control finding that one amazing investment advisor or that one amazing mutual fund that's going to, just by basically freak chance, outperform the market. Freak chance in me finding them. But what I can control is maybe I can just buy the market. I can buy a broad-based index fund that has a tiny little expense ratio. Let's say a couple of, they call them basis points. It's hundredths of a percent. So let's say 4 basis points would be 0.04%. Okay, now we're talking about something. Now we're talking about only losing a couple of percent of your net worth over 40 to 50 years. And again, I'm just trying to match the market because I can control those fees. So these are just really important ways to look at the path to FI mentally is, hey, what can I control? What can I move to my side of the ledger where I can say, all right, I have impact on this. I'm not going to let some other they impact me.